Ladies and gentlemen, a warm welcome from Vienna, Austria to our Capital Markets Day at Wienerberger. And happy Thanksgiving, by the way, to our American friends who are listening today. We do appreciate that even on this high festivity day, you join us for the Capital Markets Day. Capital Markets Day of Wienerberger. Together with Gerhard, we want to guide you through what we are currently doing, what our major challenges are, what sort of mega trends we tackle, and what brings the future to Wienerberger. Wienerberger today is a very different company than it used to be 10 years ago, obviously. We have more than 220 plants running worldwide, more than 17,000 people, and run our operations in 3 divisions. Wienerberger Building Solutions, essentially focusing on Europe. Wienerberger Piping Solutions, also focusing on the piping market in Europe and North America, with piping and facing activities in Canada and the North America and the US market. When we look at Wienerberger, we focus on sustainable solutions for generations, because ESG has been in the center of our activity for centuries, literally centuries, because Wienerberger exists for more than 200 years. All the international, national and regional treaties, targets, agreements we focus on, we have it in the center of our activities, be it the UN, be it the European community with its Green Deal. We continuously are active in improving our business in line with those sort of agreements. We report them, it's part of our management, and we have 100% integrated it in our business model. In 3 phases, we establish ESG, defining the goals throughout our business, working towards achieving the goal, and reporting on the results and how we have achieved such goals. So a very transparent process within our company. We take it from decarbonization over circular economy, biodiversity, into employees, social and governance. All of them play a very important role and are integrated, as I said earlier, in our management structure. We on the management board are focusing on those, working together closely with our supervisory board and especially the Sustainability and Innovation Committee, together with our group functions and the colleagues are operationally responsible for our businesses. We work together in order to achieve such goals. And also on a local level, on a plant level, these sort of goals are broken down to this level and are important for the local people in order to achieve these goals. They are part of our compensation system, and initiatives are set according to such. We have obviously continuously and regularly carried out materiality analysis in line with the sustainable development that is required by the UN, have determined 10 of such sustainable development goals that are important for Wienerberger, and closely follow them through our ESG program, as I said, from climate to energy, circular economy, biodiversity with clear targets, and also for the employees and the business ethics and social impact. So here, a clear, transparent set of rules and regulations that we have implemented in the company. We at Wienerberger believe on short-term goals, not on medium and long-term, where obviously you can talk a lot and add a lot of sort of general discussions. We break them down to very clear targets that we commit to, because we care and we commit. 15% minus when it comes to CO2 emissions till 23 for the whole group. A very ambitious target. We've achieved already 6%. We'll talk a little bit more in detail a little later, but here a clear target. Circular economy. We commit that all our products that we bring into the marketplace from now on, 100% to be reused or recyclable in the future. And for every site, we have a biodiversity program and plan that clearly can be tracked and analyzed also from the outside and the public. Diversity, training hours, CSR projects, for all of them we have set clear targets. And we commit to the highest business ethical standards in the industry, and when it comes to governance, international and national sort of regulations are more than respected within Wienerberger. We care and commit above all about people, because this is the basis for our company, this is the basis for our success, and we care about them also when it comes to customers, to shareholders, stakeholders, partners, and the local communities. Because it's important. We are part of a local sort of value chain, and we want to be integrated and respected for such things. Therefore, it's so important to really focus on these issues, and they are part of our day-to-day operations. Wienerberger has a strong record when it comes to health and safety. Especially throughout the COVID period, we have been focusing on health and safety and carried through our more than 17,000 colleagues safely through this period. And obviously right now, as we are facing more of these lockdowns, it's important to focus on prevention through safety apps, through regular trainings, and having a visible leadership, going out in the plants, talking to the people, and bringing to them the change that is required in order to improve our health and safety measurement. Also very important these days, because there's a lot of stress, and there's nothing to say about it other than all of us suffer from COVID in a certain way, and that's very important that we keep the mental health also in our minds when we talk about our people. We are proud to report that regularly we carry out employee surveys. 80% of our North American and European colleagues respond, and we take serious every response, every comment, every criticism, every suggestion for improvement. And it's so important to have this strong community in place, these 80%, and we want to be better even. But when we look at the international sort of standards, we clearly outperform the industry when it comes to engagement and to enablement. And we are proud of that because it shows the strong commitment of the Wienerberger workforce to the future of the company. When you operate in 30 different countries, different cultures, different way of doing business, it's very important to have a strong set of corporate values and rules. We've put this together in a code of conduct. We've published it. We work with our colleagues on this, and it's very important to have a whistleblowing tool that is actually under the direction of Gerhard and where he monitors very clearly what's happening in the company. And everybody can bring in also here all sorts of comments and criticisms and ideas that he or she wants. We are an open company. We are a company that wants to grow also in the respect of new ideas and obviously to become better. Important, and I stress this in this very sort of unstable world, is to have clear corporate values. Trust and respect are two of the four. And with those, we steer the ship Wienerberger through these waters, and it's very important to keep them on this high level. So we care about people, we have clear set of rules, and we implement them on a day-to-day basis. Governance, and we take obviously you and your comments as shareholders to our sort of way of doing business serious. We have a strong, independent supervisory board with Mr. Peter Steiner as the chair. We have added recently also more ESG capacity and expertise with Katja de Horst on the board. We have a strong diversity with a strong focus on sustainability and a strong engagement with the shareholders. A strong international board with a skill matrix that is very focused on our industry and also our challenges of the future. We are always and regularly reviewing it together with the board, and the board obviously is in close interaction with us and the business to understand if there are other skills or additional skills to be present on the supervisory board. And when you look again and benchmark ourselves to international peers, we clearly outperform them with respect to international diversity, also diversity as such, and international management expertise and financial ones. So a strong set of competences on the supervisory board and a very professional succession planning where we focus on these international management skills, the sector expertise, digitalization, finance, and sustainability. All in all the rules, local ones, we are based in Austria, but it's an international company. All of these are respected, and actually we have set even higher standards in order to ensure the highest possible quality of governance that Wienerberger can offer to you. And with this, I hand over to Gerhard, who will talk a little bit about the current performance. Gerhard.
Thank you, Heimo. Ladies and gentlemen, the year 2021 was so far a very successful one, and one which was marked by growth, by exceptional growth, but also by one where we show, after the first 9 months, a new record result. Our top line grew by 14% after the first 9 months, but also when we look back to the last years, we were able to demonstrate an average growth rate of around about 6% on a yearly base. But also looking to our ESG targets. Heimo mentioned it shortly before. We have a clear set on ESG targets communicated until 2023, and we are happy that we already in the first year are able to overachieve the target in the decarbonization, that we are able to reduce the CO2 emissions by 6% already in the first year. You know that growth is important to us. We spent this year around about €500 million for investments, for acquisitions, which we did and which we already started to integrate. We did a bundle of acquisitions, which will also be the future basis for our future profitability in the future. All of that, this financial performance, this strong financial performance, what we show, also let us made that we increase, that we raise our guidance to €650 million. And this €650 million is not including the €50 million which we already communicated 3 weeks ago for our M&As. So meaning our acquisition, what we did in North America, but also in UK and Ireland. We already communicated 3 weeks ago, basically all the results, all the numbers in detail. So I would like only to highlight the most important slides, which I think are crucial to understand the performance of 2021. You know that organic growth is important to us. We already delivered in the first 9 months 31 million euros on EBITDA contribution out of this program. And we expect also in the coming weeks, because you know the year is already done, that we are able to finalize and to contribute the whole 40 million to our EBITDA target of 2021. We have currently around about 1,400 initiatives up and run. And these 1,400 initiatives are contributing organically to our EBITDA. Cost management. We mentioned it that we are basically in a positive market environment, but next to this positive market environment where we are in, we have a very volatile supply market. And in this volatile supply market, cost management, risk management are crucial parts in your day-to-day management. What we did is that we in the beginning of the year already, that we fine-tuned some organizational setups. We have a combination, I would say, between a centralized procurement department, which is managing some centralized contracts, commodities. On the other side, we have a strong local business model, which is having the flexibility and the speed of reacting, basically, due to the local structures. In the beginning of the year, we formalized once more our internal and external communication channels, just to be fast in decision making. On the other side, we also were in close alignment the last months with our suppliers when it's about monthly forecasting, about quarterly forecasting, stock holding, and on the other side with our operations. And finally, what we also did is, and I think this is nothing new, that we are taking care on our energy, which is especially on the business unit of building solution, a crucial part of our cost structure. And this is, I think, where we also look a little bit deeper in. You know that the energy market in the last 24 months roundabout is a very volatile market, and we feel today comfortable with the volumes and with the prices which we have fixed for 2021, but also which we have fixed for the next year and even for 2023. This organizational setup to having basically a centralized procurement department in combination with strong, mature local operations, I think this also makes it possible that we are moving very controlled through this very volatile environment in these last 12 months, what we have seen. Let me quickly also speak about markets. The markets have been explained in detail by beginning of November. They are today pretty much the same like 3 weeks ago. The weather, you know, in Europe and in North America was rather mild. Temperatures were okay and were fine. So we know that October was in line with expectations. I don't expect surprises for November. So all in all, we are well on track, I would say. Let me quickly summarize once more the guidance. I just mentioned it in the beginning. We raised our EBITDA like-for-like guidance to 650 million euros. We see an additional 15 million euros at least from our M&A contribution, meaning from North America and also from our acquisition in UK and in Ireland. I would say our cost inflation is under control, energy prices, but also the other raw materials and additives are under control, so this is fine. We are sticking to our strict and disciplined CapEx management, so we stick to our 120 million euros on maintenance CapEx this year. We increased slightly the special and ESG CapEx to 160 million, just also to get the benefits out in the next years. And when we look finally to the bridge, you see that we have an additional organic growth this year of 50 million euros. And this 50 million euros is strongly driven by additional volumes and by high run rates also in our plants, in our production sites, and we were able to compensate the cost inflation, which was rather high this year, but we were able to fully compensate this cost inflation in 2021. And our self-help program, I mentioned it before, also contributed or will contribute with 40 million to our 2021 results, which finally comes to our guidance of 650 million. Just some short words on that. We expect a ROCE for this year, which is above the 10%, which is our internal target. I even expect that ROCE will be more in the field of somewhere of 11. The financial leverage will be at year end somewhere at 1.8, 1.9, which means also after digesting all the M&As what we did of around about 500 million euros. And we will continue our distribution policy, which is between 20 to 40% of free cash flow of 2021 results. And with that, back to you, Heimo.
Thank you, Gerhard. Ladies and gentlemen, when we look at Wienerberger, our growth rate on average when it comes to organic growth has been more than 6% over the last decade. 6% a year. We were achieving this because we are a local company that operates in Finland on a Finnish market with Finnish people engaging with Finnish customers. The same is in Hungary, the same is in France, in Canada, the United States, or in Russia. This is so important when we talk about the business model of Wienerberger. We are in contact with hundreds of thousands of clients and customers daily, understanding their needs, understanding their challenges, and working with them brings us in the unique position to understand what they need for the future. The current portfolio of Wienerberger, with about a third of it being innovative and about a 15% to be solution-oriented, helps tremendously in order to penetrate such markets, create new markets for Wienerberger, and gives and provides additional convenience to our customers. We have clearly identified a couple of issues that are very important for the people in North America and in Europe in order to move the construction business as such and change it. Lack of skilled labor. We see it through all of our markets. Therefore, creating solutions that have more and provide more convenience for our customers is so important. I will show you a couple of examples. Climate change, not only the external factors, if it's heat, cold, a lot of water, but also the sustainable living conditions in the house, within the house, are part of these megatrends. And we have clear solutions for these. And let me show you a couple of those. When we talk about the people who work with us on a day-to-day basis, asset owners, installers, architects, engineers, general contractors, all of them actually are in touch with us or are touch points for us in order to install, use, or maintain, or whatever, work with our product. So it's so important to be exactly at their ears, if I may say so, when it comes to our solutions. So safety, key for everybody. Certainty, quality and scalability are issues that matter. And according to those, we have centered our development policy when it comes to solutions and obviously to innovations and to tackle these megatrends. Couple of examples. Automation. On-site, because it's so important to operate on sites. Every site is different. There's no standardization within Europe. There's a very different way of building, of using and installing products, and on-site is still the most important aspect. So be it robots, be it micro-tunneling, for example, when it comes to pipes, or fabrication off-site with whole sort of wall systems, with the spider concept or other concepts where we prefabricate actually solutions for our customers. All these are the solutions that we propose. You can sort of go into more detail. This would take me hours to lead you through, but shows clearly that Wienerberger is here moving in a very, very different direction than it used to be the last 10 years ago. And quicker, faster, more quality, more safety on construction site is key. One sort of interesting example is the click brick system in the Netherlands, where you don't use mortar anymore and where you can reuse the bricks immediately and can use it for other, for example, projects. So a very interesting concept as such on the facade. But not only products and solutions, but also the digital change process is one of the most important that affects all of us in construction, construction materials, supply, etc., and installers. So we have been very quick and fast to put a system in place where we can use all our data within the company, provide it to our clients that they can work with it, and that, for example, in a market like the Czech market, they can plan their own house. Together with partners, we have established an E4 house where they can actually choose products, put them together, plan it together with the architect, and have a final price on it. So it's very key for them to have a full set of solutions that are out there in order to have their own house. By the way, when you take 50% in the Czech Republic is still do-it-yourself builders in the 1- and 2-family houses. So again, a very, very good example how we use digital platforms in order to move our business. We have thousands of leads that we create through this already in the first couple of months, and this is going to be a very successful tool also in the future for Wienerberger. Not only on this front we make big inroads, but also on the digital learning front. Installing our products is so important. Skill sets and the lack of skilled labor, as I said at the beginning, is important. So training, continuously training by digital means is so important. Internal training, external training. Thousands of hours in all the different markets that we are active in, especially when you put new solutions in the marketplace, are important. When we look at the sort of climate change, and as I said, it's very important to look at it on the water front, the energy front, and the sustainable living front when you sort of use everything within a house. And for all three, we have solutions. The water, for example, climate change. There's this rain coming through the public transportation system where we actually offer solutions in order to run them better on the urban infrastructure side, where we offer them solutions for stormwater management, intelligent solutions also when it comes to sensors. So all in all, clear solutions that are in place. Who actually would have thought 10 years ago that Wienerberger is the major supplier to cities like Helsinki when it comes to water management, or Stockholm? So again here, enhanced portfolios that offer not only pipes but the whole solutions together with digital ones, and the stormwater makes it a solution package and makes us a reliable partner for such institutions. Also in Norway, for example, where this issue of flood is an important one. Not only there, by the way, but also in Germany and others. So actually our approach is always a very focused one. Develop a system, get it to use in a certain country, get the expertise, and then roll it out over other countries. So a step-by-step approach, and we have proven to be very successful in that. This is our complete set of Rainio, where we stock the water, bring it to the public sewage system, and then obviously process it further. So again, Wienerberger today has a full set of solutions when it comes to energy transportation, be it hydrogen. For example, the only pipe that is officially now certified is in the Netherlands worldwide, where we have a solution to transport hydrogen out from the windmills into inland to use the electricity. In rough terrain, for example, in energy, when it's cold or difficult to handle, here again solutions by Wienerberger. District heating and cooling system or geothermal heating systems, again solutions by Wienerberger for these very specific and very important issues. Bringing water to remote areas, getting sewage out of remote areas, for us an issue that we have addressed with our pipes. Again, CO2 neutral living can only be an issue and can only be solved when you have solutions for heating, for cooling, and for water. And this is what Wienerberger offers these days. So taking into consideration what people who live in houses or apartments, what the public opinion, the governments and investors need, we find the right solutions. And then obviously, we are looking at all the stimulus programs, all the change programs that are taking place on a European front, the North American front, and just take, for example, the most recent change that is happening in Germany with a new government. We are there. We are there with solutions from renovation to infrastructure and to new build. And obviously then will help us to improve our business in all these economies. The renovation rate, especially in Europe, is still very, very low. The government's target 3%. We are around roughly 1% in the EU, and this is also because there's a lack of skilled labor. And therefore, it's so important that we provide solutions that can be easily implemented. And here again, from the roof to the wall to the sort of ground, we have a solution package. In-house energy generation, very important. You've seen our most recent moves in the Netherlands, for example, for the roof and for solar panels integrated with our system. But also, when you look at our acquisition strategy of flow plastic and cork plastics in Ireland and the UK, from rain to drain, where we have the whole management of water in our mind. So Wienerberger offers not only one product, it offers solutions for the house, from renewable energy to a long-lasting wall and to sort of a facade that resists for centuries. I don't want to go through all the details, but you can find them, and you see now the approach that we have. In all our different segments here, you have an example, for example, floor heating or wall heating or cooling systems in a house. But let me, to finish off this section, talk about the one and a very important subject. A lot of you have asked me over the last decade, Heimo, has brick a future? And I can answer it very clearly, yes. My friends, it has a great future. Our product is the only product that has a life cycle more than of 100 years, keeps its technical parameters for more than 100 years, and is 100% recyclable, and has a very, very positive impact on decarbonization over its whole life cycle. When we compare it, and we'll do it in a minute, to other materials out there, when you talk about the wall, we are clearly number one. Clearly number one in the performance and in the CO2 emissions. As I said, and this is the only approach that you can use when you really determine which solution is better than the other, we have 100% cradle-to-cradle approach. Our products can be reused 100% after the lifespan. And again, we don't get enough because they are more than 100 years to be used in houses. So again, this is a clearly positive approach of Wienerberger. And if I compare it to concrete, calcium silicate, aerated concrete, and even timber, we have a very positive impact. Here you see that we are actually, compared to a concrete house, half of the CO2 footprint or carbon footprint when it comes to the wall solution. And when we look more closely to timber, what our friends are not telling you is that actually at the end of the life cycle, which is much closer to 50 years than to 100, they need to burn the timber. And the capturing of CO2 during the life of a tree is then gone when they burn it. So they need to take this in consideration in scope 3, where we actually can reuse it, and our system over the long lifespan has then a positive impact on CO2 and the overall carbon emission. And on top of it, and dear ladies and gentlemen, this is then the critical one. We are living through climate change. Climate change means also hot weather, heat. And the timber house can't deal with this because you need to cool it tremendously. And throughout this maintenance and obviously the running period, through the thermal mass that the brick has and the natural capacity to keep the house cool, you save a tremendous amount of energy that has been proven now. We have track records, we have also analysis, and can show clearly that this is, on a medium to long term, the best solution that you can propose to the house owner. And by the way, through the COVID period and now, we see a strong trend back to bricks in the 1 and 2 family houses. From our perspective, and what we try to show you today is that Wienerberger is now moving from a brick-producing company 10 years ago to a solution-based company in 2025 onwards. And we want to make great progress and important progress again in the next years. From a 15% turnover share when it comes to the solutions to a 25% share. And this obviously drives our margin and drives our resilience when it comes to the business model. And I would like to hand over to Gerhard again.
Thank you, Heimo. Ladies and gentlemen, Wienerberger is developed over the last decade, over the last 10 years tremendously. And yes, we still call it Wienerberger, or sometimes I hear Wienerberger. But it is difficult to compare the company today with the company in the early 2000s. Today, the customer is in the focus, the understanding for the customer needs, and by that, when you understand the customer needs, then we try to create additional convenience for our customers. We fundamentally reshaped the group, diversified the business model, and today the business model is much more resilient than 10, 15 years ago. And this translated also in an impressive track record, in an impressive financial performance over the last years. We see, when we look to the revenue growth, that we were able to demonstrate a plus 6% organic growth between 2011 and 2020. The quality of the revenue is today different than some years ago. I will explain later on why. Secondly, our EBITDA, we can demonstrate an EBITDA growth of plus 10% on a yearly base. And not only due to the revenue growth, but also that we were focusing on optimizing our current business, that we also introduced our fast forward programs and these kind of things. These all supported basically the EBITDA growth, what we can show now after 10 years. And we clearly can also see that we outperform the market development. The markets which are relevant in North America and Europe were growing in average by 3% on a yearly base, and we clearly beat the markets with a plus 6 over the last years. And as a consequence of that, also the EBITDA margin, we're growing from around about 13% to 17% in 2020. There is a clear strategy in place to become finally a full system and solution provider. We focus on innovation and digitalization, and by this focus we try to outperform the market in Europe and in North America. Secondly, we focus on operational excellence. As I mentioned before, we are having now already introduced the second program on operational excellence. I will also come back on that. And we did the last years quite some acquisitions. We did round about 10 acquisitions the last 5 years, which also contributed significantly on our journey to become a full system and solution provider. And our targets to increase the profitability and to create value for our shareholders of plus or above 10%, we also realize, by always respecting our financial discipline and our sound balance sheet management. Let us look a little bit more in detail what happens the last 10 years. The share of innovative products grew tremendously over the last years. When we had 10 years ago around about 20% share of our revenue out of innovative products, it is today 1/3. And this is what I meant before, that the quality of revenue today is different than 10 years ago. We will keep that. We will have this as a target also for the future, that we try to have 1/3 of our revenues out of innovative products. The second bullet point was operational excellence. We started our first Fast Forward program, self-help program, in 2017-18. We started basically in 2018 till 2020 for 3 years. We had clear focus topics where we invested or where we were focusing on. It was in the manufacturing field, commercial field, procurement, and basically in the supply chain, in the administrative field. And there we realized the 110 million euros over the last 3 years. And as I just mentioned, we just started the second program, which I will explain later on. M&A was and will be an important pillar for our journey to become a full system solution provider. We did attractive acquisitions during the last 5 years, and also the deal multiple, I think, is a very good one when we see a 5 times post synergies after 3 years, which is also clearly below our own multiple what we have. And what we also did and what we constantly do is that we review and analyze our portfolio, that we constantly look if all the markets, the segments are fulfilling the minimum financial requirements, and if it's also the strategic way forward clear that we stick to the markets. Otherwise, we take also a clear decision like we did last year with Switzerland that we also step out from certain markets. This finally ended in a strong increase the last 10 years in our profitability. The return on capital employed developed from 1% to above 10%. And I think here you see that all the measures, the strategy which is in place is paying off clearly. And not only the profitability increased to above 10%, also the free cash flow generation is very strong. The business was generating on a yearly base around about 13% on a yearly base between 2011 and 2020. And we were focusing clearly on the optimization of our existing business. We were very disciplined in our cost and capex management. And as I mentioned, we reviewed and constantly are reviewing our portfolio. The shareholder return. Basically, we have seen that when you have invested in Wienerberger 10 years ago, you see that you have today a 4 times higher payback on your investment. And also with that, we were outperforming the stock 600 construction materials index by far. So the growth and is also reflected in the dividend development, what we paid per share over the last 10 years. We are able to demonstrate that we have a dividend development of plus 20% in average on a yearly base. And this also comes as the dividend policy is reflected in our financial performance of the business. So the last years, we always paid between 20 and 40% of our free cash flow. I think the slide of our cash conversion is an important one, respectively the message. We were able, the cash conversion rate, to develop from 57 to above 80%. And this came also through our strict cost management and also that we stick to our capex in a very disciplined way, that we stick to our capex management, that the cash conversion rate were growing above the 80%. And when we see the financial situation of where our financial leverage is, it developed by end of this year in the field of 1.8, 1.9, as I mentioned before. But it also means that the last 10 years, basically, we never had asking our shareholders for additional money. We were financing this growth basically out of our own generated free cash flows, and finally are still also this year, by the end of this year, after having digested a 500 million euro on M&A strategy, to end up with a multiple which is in the field of 1.8 and 1.9. And I think this is an impressive development what we can show and what we can demonstrate. Just to summarize once more in a shortcut, the last 10 years, organic growth plus 6% in average, cash flow generation plus 13%, and the strong increase in our cash conversion rate from 50 to above 80%. And with these words, I would like to give back to you, Heimo.
Thank you, Gerhard. And ladies and gentlemen, I think this was very important to see the change of Wienerberger. Over the last decade, we developed this company from a very, very focused brick producing company to a solution and to a company that really focus on the needs of and the convenience of our customers. Obviously, today we run our factories with 85 to 90% capacity. So growth needs to come from somewhere else. And, by the way, the products that we produce or the solutions that we produce are very different than 10 years ago. So actually you can't compare the utilization rates with the ones that we had in the early 2000s. So again, the company moves and develops further based on a clear set of vision that we have put ourselves in place, and we want to tackle the mega trends, as I explained earlier. So to add, when we do M&A, to these existing portfolio, a new portfolio that helps us to improve the value for our customers. We want to diversify in our end markets by keeping the same geography. So Europe and North America are the key focus areas for us. And by adding and combining acquisition and the businesses that we bring to our portfolio and the existing one, we create substantial value, as you have seen. We don't shy away, by the way, to sell off or close down operations that are not interesting enough for us in order to develop further. A couple of examples: Russia and Greece, we went out on the piping side, but also, as explained earlier, on the Swiss side, where we don't see the profitability coming through in the next years. Optimizing the footprint when we are in certain markets is key for us, and you will see how we do it and how we actually tackle this issue. Diversification and market immersions are the ones where we focus on generating scalability for our group in order to move the business forward. We've just put this chart together to show you how thoroughly we focus on M&A strategy. In the years 17, 18, 19 and 20 up to 21, a clear set from optimization of footprint, diversification, smart design and innovation, where we position ourselves. And you clearly see how we consolidate certain markets further, but how strongly Wienerberger is now focusing on diversification, the smart aspect and the innovation aspect. And you see it clearly in ones on the waterfront, and a lot of you are going to ask, is this continuing? Yes, it will. You remember when we said clearly at the acquisition time of Pipelife, this company is focused on commodity pipes. We want to take it out to a premium producer with accessories, with new solutions. And this is the way forward, ladies and gentlemen, how we drive the change. You remember Meridian Bricks, we talked a lot about it. You see clearly what it brings to our businesses. Diversification in end markets. We go to the most important and most dynamic market in the US, to the Texan market, improve here our presence. Canada, obviously, we create an even bigger business in Ontario, where we add our existing portfolio to the one that we get through Meridian. And you see over the last decade how strongly our North American operations have been outperforming actually the market when you look at the EBITDA towards the housing starts. So again, we made a promise to you that we will outperform markets, and we kept it, and we want to keep it also in the future. With smaller acquisitions like Interact, but also bigger ones like Flowplast and Cork Plastic. Entering the Irish and the UK market in a clearly structured way is key for us. We want to be a big player in the UK when it comes to infrastructure and when it comes to RMI solutions, because we have a strong business. Remember, when we entered the brick market in the UK, we were considered small. Today, actually, we are the leading one when it comes to innovation and change. And together with this package, we will become even stronger. Combining small and mid-sized businesses like Ready and Preflex, together with our business in the Benelux, went to create the Spider concept, where we are very successful, or the pre-wired concept for installation on the electrical side. Again, the same will happen in the UK with PDB and Flow Plastic and Cork Plastic, and the Wienerberger one when it comes from rain to drain, and have here a complete set of solutions out there. Like this one that I showed to you in the Netherlands and in Belgium, the one in the UK and in Ireland, when we really see a holistic approach of the house, and which brings us in a very strong market for us, in a very important one, the UK. We have now combined sales of more than €500 million turnover, where we focus also on renovation now very strongly, and where we create synergies. Synergies not in the back office only, but especially in the front office, selling the system approach to especially social housing companies. So Wienerberger actually becomes a company that not only tackles the mega trends, but it supports our customers' needs. As I said, we create additional convenience for them. And by the way, at the end of the day, we become a more resilient business through this. Focusing on M&A, and we have a lot to do in the next couple of years because there's a full pipeline in North America, in the UK, but also on the continental European side. We see so many great opportunities out there to actually improve and make our business more resilient and stronger in these areas. And where we can actively create value, because this dynamic approach, where we clearly create a payback from 5 times after synergies when you take the 3rd year, is a very strong track record. And when you look at all the acquisitions, they meet those targets. So again, a strong pillar for growth is going to be M&A in the coming years for Wienerberger. But let's actually focus again on a very important subject, the environment. The environment is important for a number of reasons, because decarbonization plays an important role. We all are set for a track of a carbon neutral economy, and Wienerberger is on track for such a carbon zero emission economy. Circular economy, very important, and biodiversity also. That's why we don't see one aspect of sustainability, decarbonization, but a holistic one again. And we have set again ourselves clear targets with minus 15% till 2023. We want to reduce further the net reduction by 40% till 2030, and obviously be carbon neutral by 50. So again, a clear vision that Wienerberger has here in mind. Just to show you again our track record, as Gerhard has done it with financial figures earlier. When you take 1990, 2020, we have reduced per square meter of wall 50% the CO2 emissions during this period of time. So it is possible, ladies and gentlemen, and we will do it. By the way, when you look at this, again, this 15%, we as a company are not such a big emitter of CO2 compared to other materials like cement, for example, or like steel. By the way, for all of you who are listening, we are Austrian-based, and the biggest Austrian steel mill based in Linz, Austria, emits actually a certain number of CO2 a year. And Wienerberger, with more than 220 sites, emits not even a quarter of the CO2 emissions a year. So you see what sort of impact we make, but we don't stand still. We reduce our CO2 emissions further and have set ourselves clear targets. Smaller one, mid-sized one, it gives you a good example that we go through the whole process again, like we did with the optimization and performance enhancement program. We go through the whole overall operations and look at CO2 potential of reduction. Also, the material plays a big role, and what sort of material you use, how much you use, and dematerialization, less raw material, plays obviously, especially in the brick business, a major role. Eco-brick, to make it thinner, smaller, lighter, a very important aspect without actually influencing in any respect the usability of the product and the stability. But here again, we are on good track in making progresses. Again, using energy resources that are available is important. Wienerberger will do its best to be able to use different sustainable energy resources, be it biogas, be it hydrogen, syngas, or others. Yes, ladies and gentlemen, we can do it. We already use about 50% biogas in our Danish plants. We test it. We test it in different markets. By the way, there is no European energy strategy. It's, again, a member state issue. So it will be different from state to state. And therefore, we need to tackle it differently. First of all, we need to focus on availability. Our plants run 24 hours. It needs to be affordable so we can run it. And we need infrastructure to get it to our plants. We can run them on green energy. It's no problem. We need to have it. Yeah? And we will do our best, like the colleagues at the summit in Glasgow has said. to reduce and make our production more efficient is the best solution for the moment by improving our emissions and by reducing the energy consumption. And that's what we will be doing in the next couple of years. We will see a tremendous change when it comes to the energy resources that are available. Wienerberger has proven to tackle it in a way that we forecasted, as we did, for example, with the energy purchasing policy. We'll do it here as well to ensure that we have the right energy resources available. This journey is a journey that leads us through efficiency improvements, new technologies. We spend today not only money, but brain today with universities, research centers in new technology. We switch to green fuels. Wienerberger will have green electricity from next year onwards. We dematerialize our products as much as we can. We use alternative raw materials or recycled ones more and more. And together with our suppliers, be it machinery, be it technology, we look for improved technologies overall. So this is scope 1 and scope 2. But we keep also scope 3 in our minds when it comes to recyclability. I told you that 100% of our products, the new ones, will be to be reused or be recycled. And we focus on the supply chain. Bringing our products around on a local way, local value chain is important. Not driving them for thousands and thousands of miles. Being local is here the best solution. And also on the packaging side to make here good inroads. All in all, major downstream issue is emission savings from the product to the solutions. And not to be forgotten, the lifespan of our products. So here again, we do a lot of research and development with alternative raw materials or to be reduced raw materials. We have, for example, here an example for paver, where we can reduce old pavers in order to integrate it in the production process, or on the pipe side, where we reduce obviously new material by recycled material. And let's move then very quickly to the biodiversity. Ladies and gentlemen, a company like Wienerberger takes sustainability serious. Today, it's not only enough to focus on climate change. Every other minute, some sort of species get extinct. And we need to maintain, to improve biodiversity. We have set ourselves clear rules, and I'm proud that the whole workforce of Wienerberger is working with us. We are working on every site, every industrial site, to improve it and have a clear plan. I show you here, for example, an interesting one, how we tackle it, what sort of things we put in place in order to improve the overall performance of every Wienerberger site throughout our operations. And again, here a clear track record of bigger, smaller, mid-sized projects. And it's actually fascinating. It's exciting what sort of ideas come out of the company and what we can do, from fishes to flora to fauna and all sorts of things that we can improve, and we will improve over the years to come. Again, I think it's so important that the whole management, the whole line management is fully aligned, from the targets that we communicate to you and that the people on a day-to-day basis implement in our plants, be it on decarbonization, on the circular economy, and on the biodiversity. So again, it's a commitment that we take, and we keep the promise. And therefore, at this stage, I will give over to Gerhard again for the outlook.
Thank you, Heimo. Ladies and gentlemen, we will continue our growth. We have the clear ambition to further grow this company, to become a full system and solution provider. There's a clear strategy in place, and with that, we want to outperform, we want to beat the market, as we have demonstrated also in the past. There is the target in place to have a share of 1/3 of innovative products, to have a share of system and solutions more than 25%. We will further focus on our growth and self-help program. And also, as we mentioned, M&A will be an important part of our growth strategy. And next to that, we also want to continuously generate shareholder value. Like we did in the past also, we confirm our ROCE target, which will be still above 10%. We will stick to that. We will also allocate a certain money on a yearly basis for dividend payments, which is around about 20 to 40% from the free cash flow, so also to stick to that. So we confirm, and to generate shareholder value is our goal in this strategy. Let us look a little bit deeper into these targets and focus areas. Innovative products, we mentioned it before, 1/3 should be also in the future part of our revenue to continue the journey to become a full system and solution provider. The innovative product can be part of our revenue as a product itself, but also can be part of our system or a solution. And together with digitalization, with digital services, the combination of to become a full system and solution provider is the idea to keep this share of at least 1/3 of our revenue. As just mentioned, the system and solution share should increase from today 15% to 25% until 2023. We have heard it before. The focus is to create more convenience for our customer. That means we tackle not only the megatrends, but finally also, because the megatrends are not only megatrends for Wienerberger, but also for our customers. And therefore, solutions like prefabrication or tools which are easy and fast to install, this is where we focus on. And if this is a product solution or if it is a combination of product and service solution, this is basically all possible and will finally increase the convenience of our customers. Our self-help program. We are just started this year, the second program, where we are striving for the 40 million, as I just mentioned before. Also next year, we are striving for 45 million euros on EBITDA contribution out of self-help measures. We keep the methodology in place, meaning that if we spend money, there is a clear commitment to show a payback within a certain period of time. We expect also in the next years, the payback or the contribution will come from the manufacturing field, that we invest in efficiency and in the cost structure of our production footprint. It will be the top line. It means a share of innovation, which will also clearly contribute to our revenue development and profitability development, procurement, which is a crucial part in these volatile times, and also logistics and supply chain measures. And when we speak about digitalization, we are doing at the moment the digitalization of our stockyards. We're doing the digitalization of all our 200 production sites. And we have clear targets also there to constantly digitalize our production sites, but also our stockyards. As I mentioned before, we have currently 1,400 initiatives well on track, and we will keep the methodology also after 2023. This kind of continuous improvement will be a fixed part of our strategy and a fixed part of our company culture. CapEx into M&A, and Heimo mentioned it, there will be a fixed part on cash flow, and free cash flow will be allocated also to M&A. We cannot forecast how much, but we will always have a certain part looking for M&A investments. The geography was mentioned. It will be Europe and North America. We will invest where we enlarge our footprint and where we also increase the share of system and solution. So it will be a mixture of scale deals, of scope deals, but we basically will strongly focus also to increase finally the share of system solutions, and with that also to increase the convenience of our customers. The free cash flow generation, what we performed and what we demonstrated in the past 10 years, that we were able to increase on a yearly basis with more than 10% our free cash flow, is also our ambition for the future. So the topics to improve constantly our existing business, to keep cost management and CapEx management in a very disciplined way, and finally also all M&As, what we are doing is following a very structured and disciplined approach to secure that the cash flow, the free cash flow generation keeps going up and is also contributing to the shareholders, to financing and to M&A policy. And next to that, when free cash flow goes up, also we are positive that ROCE development, what we have seen, which developed from 1% to 10%, or basically 11 this year, that we also keep our return on capital employed on a level which is above 10%, and by that also creating value for our shareholder. We have seen that before. We also, in the future, we commit to our dividend policy in the sense of that we 20 to 40% of our free cash flow allocate to our shareholders, and by that it is also reflected the performance increase in our business development. And finally, when we look to our cash conversion rate, this what I just mentioned, the cash conversion is at the moment above 80%, and also there with the measures what we just explained, we will also stick together to keep cash conversion on a high level by looking on cost management, capex management, simply to have a high cash conversion rate, which is supporting our free cash flow generation and also is supporting our sound balance sheet management. So we will always, out of the free cash flow, allocate a certain part also for refinancing and settling debts. A certain part will go into M&A and a certain part will go to shareholders. And by that, we always keep and respect our financial leverage, what we have internally set of 2.5 times by the end of the year. And with that, Heimo, I would like to hand over back to you to speak about the guidance for 2022.
Thank you, Gerhard, and ladies and gentlemen. I think you have seen that we run Wienerberger with a clear set of financial KPIs, with clear targets, with ESG targets and industrial targets that we sort of put together throughout the thorough process in the company and that we stick to and that we openly and transparently communicate on. Now let's talk a little bit about 2022. Ladies and gentlemen, 2022 has not started yet. I know that you're all anxious to have numbers and figures, but let me make a caveat before I start. It's November 21. So everything I tell you from now onwards is based on the knowledge that we have today. And therefore, obviously, usually the company and we have always been guiding in February of the ongoing year with respect to the whole year. So it's a very sort of preliminary sort of approach to the year. A lot of things might change, but as I said, we continuously focus on innovation and self-help. Gerhard has explained it in very detail today. These are the major drivers for the future growth. Again, a very second important message that we want to give. We are determined in an environment where inflationary cost increases are still out there. And please don't underestimate also the labor cost increases. We're talking a lot about raw materials or energy, but there's also a labor part in it. So we clearly say we are determined to offset those inflationary cost increases by price increases throughout our portfolio. Obviously, the integration of our M&A activity will contribute positively to the future results. When we look at the markets, as of today, we see a stabilization trend on a good level, on a high level, on the new build area in Europe and in North America. Some of you will say, why doesn't it grow further, Heimo? There's so positive news out there. Yes, might be, but I always say, keep an eye on the lack of skilled labor, keep an eye on the capacities out there in the market, and there might be some political or economical instability. So a plus of 2% is already in there when you look how we have set the trends here. Renovation positively throughout all of our markets. Again, one short remark here, also to be considered, is there enough labor around to get all the projects done, and is there enough people to actually satisfy the demand? Infrastructure should stabilize on this high level, a little bit up in North America, because here the stimulus package is even stronger than in Europe. All in all, we assume for next year no economical downturn, no political disruption on the EU front or some local or national fronts, and no major changes in regulations. The uncertainty, however, remains as we speak, so we have to operate in these circumstances. The cost side, the input cost side, as you have seen this year, we try to manage in a way that we look forward and actually tackle those issues rather quickly. So we foresee this year, obviously, from next year's perspective, inflationary cost increases. And you might ask me a little later in a couple of minutes, it's 2, 3 or 4%. It's going to be seen because labor negotiations take place currently, other things are moving, but we have put them into our equation. And we are again determined to offset this by price increases in our local markets. Keep in mind also that our plants, as I said earlier, are running with relatively high capacity utilization. So 85 to 90%. So the room for volume growth is limited in certain parts of the business. So by growing the mix, by debottlenecking, what Gerhard has shown you with the self-help program, we obviously contribute positively to the profitability enhancement. The capex on the maintenance side will slightly increase from 120 this year to 135 next year. Why? Because we have a different asset base. Meridian, Flowplus, Corkplus, other sort of investments have come our way, and they need also maintenance capex. So we're slightly increasing. But again, very disciplined approach here. On the M&A contribution, all this would have been achieved this year, about 50 million additional EBITDA next year. And headwinds, we had a very exceptional situation with respect to raw material pricing and the impact on our result positively in North America. But this 20 million we won't see next year because this was a very, very special American situation. So when we look at the bridge again, from the 650 that Gerhard has shown you for this year, we see the 60 in growth, a 50 in M&A contribution, and this headwind of about 20 from North American piping operations. So again, we are in about the range of 740 to 760 EBITDA for next year. Considering what I've said, we are in November this year, and there's things still very premature, but still we feel that we can sort of present this to you. When we look beyond 2020 for Wienerberger, the key issue is organic growth. With the new portfolio, with the investments in solutions, we want to outperform the market again. Yes, ladies and gentlemen, we have done successfully plus 6% over a decade. Is it going to be 6 over the next decade? We'll see. Certainly we need the support of the M&A, because alone from the current sort of layout, we won't be able to get this every year. So again, I think here you have seen the shift that Wienerberger takes for the future. But clearly, with 1/3 of innovation, 25% on solution-based sort of approach when it comes to the portfolio, we see ourselves capable of outperforming the market and moving the company in a company that gets together the sustainable solutions to meet the mega trends and to implement ESG throughout the whole value chain. And therefore, I think Wienerberger is ideally positioned today for a better future by bringing more convenience to our customers, by developing further innovative and smart solutions, and take the approach holistically for infrastructure, for water and energy, for the renovation, especially in the 1 and 2 family houses in Europe and the US, and obviously in the new build segment in North America and Europe. So again, a very strong footprint that we have that we want to increase and sort of reinforce over the years to come by a very interesting potential for M&A that is out there and that we want actually to tackle over the years to come. Thank you very much for your attention, and I leave then the floor for the further discussion.
Dear ladies and gentlemen, also a warm welcome from my side, and thank you for joining us today for our virtual Capital Markets Day. I hope you enjoyed the presentation. Thank you, Mr. Scheuch and Mr. Hanke, for the insights. We are now continuing with the Q&A session, which are hereby open. I would like to briefly remind you on how the process works. You should now see on the screen the instructions. Go to the website menti.com, use the code 88129632, click on submit, and if you would like to mention us your name, please also feel free to add your name. Alternatively, you can also scan the QR code, which is shown right now on the screen. I think we would start now with the first question. Yves from Exane. Your 2022 EBITDA bridge shows 60 million underlying growth, or 15 million excluding self-help, or 2% year-on-year growth versus 2021 base of 650 million, implying lower EBITDA growth versus organic sales. Why, given your pricing now?
Power.
Oh, yes, sorry.
Thank you. Shall I start with this, if you want me to? Well, Yves, I think I fully appreciate your analysis. It's a fast analysis. I've said very clearly from this point onwards, we are in terrain where we need to see things developing further. It's November of this year. We give you an insight how we see markets developing, how we see the pricing structure developing. I confidently said we will be able to cover price increases through our price increases, inflationary cost increases. I'm not saying that we outperform pricing. We have not sort of talked about the mix structure, but eventually we need to see also what the markets will take next year. It's too early to have a clear sort of indication what might happen. From today's perspective, we feel comfortable with the guidance that we have provided to you.
Thank you. Yves from Exane. As the group increases its exposure to solution, does this imply higher fixed cost absorption and margins ultimately as you cross-sell more products per employee?
Yeah, definitely. Obviously, when you have more solutions, you have better pricing, you have higher margins, and here obviously from an employee perspective, you have a better performance, and this is going to be the case. You have seen it also in the past.
Would it be fair to say that each local market requires different solutions based on customer needs, building traditions? If that is the case, how to create a cohesive strategy at the group level?
Well, I think this is obviously a very good question. What you have been seeing from us when we develop solutions, being on the infrastructure side, when it comes to smart solutions, when water management or energy efficiency in buildings, we tackle the local sort of aspect very well, and then there is a general sort of approach throughout Europe especially, but then it needs to be sort of a little bit of streamlined or adapted to the local needs and requirements. But on the base side, we have here clearly, when it comes to manufacturing, the development and the technical parameters, a common approach, and there's probably the last 20 to 25% where you need to adjust it to the local needs. And this is, I think, what Wienerberger does very well and what we have been doing very well over the last decade.
Thank you. Following on, does Wienerberger not end up as a portfolio of local businesses with no meaningful synergy cohesion at the group level?
No, definitely not. Definitely not. I take this as a very provocative question, and I appreciate it. But I think what we have been showing and trying to sort of prove also as a track record, that we have regional hubs, that we have obviously a strong approach pan-European when it comes to research and development, also the financial side, and you can elaborate also on the operational excellence program, for example. On the CO2 and energy side, a very strong approach over the group. So please don't get it wrong. When we said there's a local component in Wienerberger's business, it's a local component because we are close to our customers. Right. This is very important. Yeah, we speak the same language as the French masons, the French roofers, or the Czech roofers, and this is important. We are not arrogant international people that run business units throughout Europe. This is what I wanted to say, but we are very determined to run obviously this integrated approach in order not only to save costs, but to improve the performance of our products.
Right. I think it is what you mentioned before. It is, I think, a 70-30 that, yes, we have local specialities, but finally the markets are similar. The problems which are caused by megatrends are similar. So it is that you can use the systems and solutions in regions, and you have to adapt slightly on certain national norms or needs for the installer. But basically, the basic idea can be scaled, and I think this is the important message. Yes, you can scale these solutions also for certain regions or even across the whole continent.
Is there any overlap in the sales channel of commodity brick and brick solutions and piping solutions? Do you need two different sales teams?
First of all, I want to make it clear for us there's no commodity brick or pipe anymore. We have moved away from this. You see it also in the pricing, you see it also how we position ourselves, first of all. And if you look at obviously the different end markets, when you take infrastructure, and housing, they are completely different markets. So you need different sales forces because they have different decision makers, different projects, etc. When you talk about renovation or when you talk about new build, here on a project sales perspective, here you see a sort of, I wouldn't call it synergy, but I would call it here a strong possibility and potential to integrate solutions, because obviously it's the housing aspect when it comes to energy savings, how you manage it, how you manage the cooling system, how you manage the water system. And this, what we try to show you, is obviously an integrated approach. So it's not so much a sales team in the traditional sense, it's more a pre-sales approach that you have out there. Yeah?
It's basically the project itself, which generates the synergies, if you like to call it like that. But it is already today there. We have already a project sales, a pre-sales team, which is moving to the decision makers and is selling basically the solutions, or is selling or trying to increase what we always try to explain, the convenience of the customer, if it is the architect, if it is the investor, or if it is the asset owner finally.
Next question, please. M&A will be an important part in future as well. What countries will be in focus and how will acquisitions be financed?
Well, I think we try to be very clear that Europe and North America are the key focus areas, and we can clearly say today we won't move outside this scope, regionally speaking. Why? Because we have very strong management in these geographies. We can integrate businesses very fast. We can actually create what we promised, the 5-time multiples after the 3rd year, through the fact that we are present in these markets. We limit risk factors, which is very important, and also from a perspective of knowledge of the supply chain and the distribution channels, we clearly have an advantage being in those markets. And the financing, Gerhard?
I think we have seen it. 2021 was, I think, a good example which cash power we had. We had this year 300 million, which we spent basically to our shareholders, but we also spent 500 million euros only on an M&A, and as I mentioned before, we still end with our financial leverage of 1.8, 1.9. So the business is strongly cash generating, so we are able to finance a big part of acquisitions out of our own cash generation, what we have, and if necessary, there's a capital market, and we also would not shy away to ask the market if needed.
Thank you. Yves from Exane, have you seen or do you expect pipe CAGR to increase over time thanks to the sustainability and stimulus programs across Europe and the US?
Well, the answer is definitely yes to the US, because here we have seen a very strong growth trend, and this will continue because the US is much more active in the stimulus programs. The European one is therefore difficult, because I always repeat myself, there's no European plan. There's a sort of declaration out there, but the European member state countries need to implement it, and some are faster and some are slower. And therefore we have seen in certain countries obviously a stronger trend, and Yves is right that here the growth rate has been stronger, and in others it's been a little slower. But generally speaking, you're absolutely right. Also in Europe we'll see over the next year a strong growth rate here on the infrastructure side.
How do you define what an innovative product is?
On average, we say in our group that any product that is younger than 5 years is considered, or any solution is considered as innovative in the market. Because the building material market is a market that moves slowly, so 5 years to introduce it, to get it accepted, that people use it, takes 2 to 3 years on average, and then obviously we consider it as an innovative product.
Can you give us some insights as far as the main competitors and the competitive landscape?
Well, the major competitors, if we look at, we need to look at different products or solutions. So let's start with the piping one, for example. In Europe, we have major competitors like the stock-listed Uponor from Finland, being a little bit in infrastructure and especially in housing, for example. We have Aliaxis out of Belgium, a privately held company. We have our friends from this Mexican Wavin, part of the Mexican group that are not stock listed. So these are bigger ones. And then you have smaller heroes, that the Sendalo, for example, in the Dutch and Belgian market, some European companies in Poland and in the southern Balkans, and some German companies active throughout Europe. So it's a multitude, I would call it, from local competition when you come to these aspects. In housing, it's a little bit different because you have bigger people in this, a little bit, not so much like Geberit and others and George Fisher, but again also small and mid-sized companies that are active in there. So for us, a good potential to further grow and consolidate the market in the piping segment. The US is completely different because it's a vertical integrated part when it comes to piping, because big companies in the granulate and part have sort of consolidated the industry. When we look at roofing in Europe, clay roofing especially, I take this, we have a much more consolidated market with people like Standard Industries in this part of their business, like obviously Terrial or the Edilion business in France, and some mid-sized players in continental Europe, in especially the German market and some Eastern European markets, but fairly consolidated. The brick market, clay blocks, is very consolidated, so you have only small and mid-sized players, local players in local markets, so no European, pan-European one. This, the facing brick one in Europe is consolidated in the UK with Ibstock, Forterra and Wienerberger basically, and on the continent with Wienerberger and smaller sized, mid-sized players in Belgium, the Netherlands and Germany. So this is the major part here in this business. In the US we have now a clearer structure with us as a strong player and some Acme in especially in the western US part, and some other players also like the Australian company in the eastern part. So it's a very consolidated industry, and you have local strong businesses that are important because we need them as partners in the market to bring the message of bricks out and to actually work the market together with us.
Thank you. Innovative solutions seems to be driven by M&A. What is the criteria? How do you look for deals, and how is the pipeline looking? What are your targeted products, solutions, or country by country?
Well, I don't think it's innovative solutions is only driven by M&A. It's driven by internal research and development and M&A. Yeah, and when we combine those, we create then additional solutions. So it's not a process, and I don't want to have this misunderstanding that Wienerberger runs out there and says, I need to buy this company because it gives me this solution. No, we go out there, as I said, with the criteria that we tried to present today, and they fit in diversity, for example, or in smart solutions or in innovation to our portfolio, and by combining it we create additional solutions. I've tried to show it with cork plastics and flow plastics, and this will provide us a major inroad, for example, in the UK RMI market, and where we can grow substantially. By the way, we are adding already capacity in flow plastics in the UK. Yeah, and in cork, because we are sold out already by using our synergies that we have there on the sales front. And the same goes for Eastern Europe. We are not sort of going out only to buy companies, we actually bring the solutions together. And you have seen examples like in the Dutch market with the two recent cooperations that we put in place on the roof for flat roof systems, and also for solar panels, where we combine again solutions. So here again, very targeted sort of approach when it comes to corporations or to M&A overall. There's no country left behind. It might be in Hungary as it might be in France. It might be in Belgium like it might be in Finland. So here we have a lot of smaller, mid-sized businesses out there that we can combine with us.
Following up on this one, please give some examples of revenue and cost synergies of recent transactions.
Well, I think when you look at this overall performance, when we buy companies at 7 or 8 times multiples and then can reduce it by to 5, you see clearly what the potential is out there. And so this is a strong potential, and all the examples that I've shown you today in my chart actually have provided these sort of synergies.
For For acquired solutions that are currently specific to a particular region, such as Struxura in Benelux, Flowplast in the UK, is there scope for scaling to more geographies?
Definitely yes. Yes, that's why we do it. Struxura has here the advantages that we can try out the system and how we approach the market in a, for us, very defined area like the Belgium, I would call it even the Western Belgian market from the French border up to Ghent and Antwerp and Brussels. So it's not a huge area where we can really sort of focus on, work with our clients, get the logistics right, and especially also the design process, because this is actually the critical one.
That's the critical part.
Yeah.
And it is, I think it is a learning process also, and as Heimo said, it is a new way of working. It is also for the installer a new experience, because in this kind of business there is no mason. It is prefabricated, and you have simply different challenges also to bring a piece of wall to the construction site. And there are certain markets where we also see that it is easier to bring it into the market, like Belgium, but also like South Germany or Austria could be, Czech could be. This kind of market definitely interesting for this kind of prefabrication, like the example what we show in Belgium.
And actually, this is a good example, if I may say, to one of the further the other questions that we had at the beginning. Here we have the Synergies as a group. We can take this example in Belgium, transfer it here to Austria, for example, and then to Hungary or the Czech Republic as such. And the same goes, by the way, for the piping segment when we talk about rainwater management and this sort of special solutions that Flow Plastics and Cork Plastics do in the UK to bring them to the continent.
Thank you. Holcim has presented a very cost-effective procedure to replace clinker by calcinated clay and its quest to reduce CO2 per ton. Do you see significant competition for available clay reserves?
No, I don't see that. It's very different, and I think from our perspective we have no risks there.
Please summarize the price increases introduced in the current year and outline the plans for hikes becoming effective early next year. What is the associated revenue uplift to 2022 revenues?
Basically, I think we mentioned it already in a very detailed way in the Q3 call, what was the price increases in this year. And I think at that time already I explained we have to look at it from really business unit to business unit, as basically the business units are also performing differently. Finally, I think what is important that we in every business unit were able to cover the cost inflation, and even in the business unit of the piping segment, we were able to cover in the third quarter significantly the cost inflation. As we mentioned in the second quarter of this year, that we were in a certain area of Europe that we were suffering, but also in a smaller 1 digit million amount that we were suffering. All in all, once more, we are covering the cost inflation in all three business units so far, and we are also optimistic that we can keep that for the rest of the year. Everything which is related to 2022, as we said in the beginning, it is end of November, it is simply too early to already give now a clear pricing strategy. What would it mean in lifting up the price level? Our approach is that we will cover also in 2022. That's the clear ambition, the cost inflation, what we expect.
And we have thousands and thousands of products that we put in the market, and therefore pricing per product would take probably a little long to explain. That's one thing, and an overall sort of group one is not very representative. But I think what you need to keep in mind, I think that we are moving on pricing also aggressively by bringing inflationary cost increases and offset them by price increases. Wienerberger has been a very trustful partner for all of our sort of installers and business partners, and this is very key. As shown in the COVID crisis, we are not sort of a company that has price hikes by 10 or 15% due to the energy cost, for example. Right. And this is appreciated because they can calculate with our products long term, and this will pay off for Wienerberger on the long run. The next question is about, if I may sort of say, about the Central Eastern European markets and that I was so optimistic, and I still remain optimistic. I've not been pessimistic today. I can't read this in my own notes, and I've been very optimistic and continue to be. I've said clearly, in our picture when we talk, plus 2% is still growth.
Right.
And we have seen growth this year in certain countries, especially from the second half onwards, like in the Czech Republic, Poland and Hungary. And this will continue for the full year, so you will have in certain countries stronger growth. And I said also, to give you a color, nothing to worry about. I'm only saying there needs to be the resource there, the human labor.
The labor, exactly.
Because obviously when you take the Czech Republic, you don't find people to work on construction sites. That's the issue. There's not enough Ukrainians coming into Poland and the Czech Republic to satisfy the demand there. So again, nothing to worry about. It's going to be growth, but probably not a double-digit number. Yeah.
Given strong emerging demand for green and solar roofing, do you have to expand more into flat roofing than previously planned? I think that's a perfect question.
Well, I think it's not that we have previously planned something. We have clearly said we are a company that is active in clay roof tiles to start with. Therefore, we have developed our competence on the pitched roof. And the pitched roof means accessories, means also solar panels when you renovate it, and means a whole bunch of products that you use for renovating the roof or for the new build. Yeah? And now, I think what is important that you understand, we will slowly but steadily also tackle the flat roof, because we have products, as the one now from the Dutch colleagues from Lidex, that we will integrate in our portfolio, and step by step we will enter this market also.
Referring to page 133.
Oh, I have to look at it.
Yes. Please break down in which areas, product regions, noteworthy volume growth is still achievable. How should we think about debottlenecking, CapEx and growth CapEx outlook for 22?
Well, I think first of all, let it be our job, and I don't want to be arrogant, to sort of look at what we have available on CapEx capacity and how we do this. And I think from our perspective, we have given you a clear sort of indication at what sort of capacity utilization we are running in the different geographies, meaning Eastern Europe, Western Europe, Northern Europe and North America. But we will debottleneck as much as we can, and as we shift also in our product mix, this has a major impact. Less on the piping side, more on the brick or roof tile side. So again, you will see us move there, and what Gerhard has said, in the spending of this 165 million this year has been also some sort of capacity debottlenecking.
Which will be effective in the next years, right?
Thanks for the presentation. If you spend 500 million on M&A and next year is 50 million, should we expect a further 50 million in 2023-24 as synergies are delivered?
Well, I think the calculation is right, and if we say after the third year, it's after the third year. So it will be then not next year, but in the years after. So it's like actually, it would be too easy to ask the 50 million. It's a nice try, but this in 23 will be a certain amount, and then in 24 again. You can't add twice 50 million, then obviously you get to a multiple that is lower than 5, I think. Yeah, but we understood each other well, so it will increase.
You cite a healthy pipeline. Could we see another year of 500 million next year?
You know, acquisitions we can't plan them in a way like we plan our operational excellence program, our CapEx program. It's something where we negotiate, sometimes over years, sometimes it goes quicker. An opportunity that we have been pursuing for a long time comes our way. So I think, as Gerhard has put it, we will actively look at it. We have a good pipeline out there, and if some smaller, mid-sized or even bigger deals come our way, we will move. And I think here I'm confident that we'll have certain very interesting sort of things to discuss about.
Have you thought about a sustainable margin target for the group as it stands today?
I think this is not so important anymore, because we have such a vast variety of products, and to have one margin target is actually not very representative. I think it's very important what Gerhard has shown is targets on the cash conversion, for example, on the return of capital employed. These are things that are very important because we drive here towards a very different group. I think some of you are still a little bit with us in the old brick history where we had one or two products and therefore gave a margin guidance for these 2 or 3 products that we had.
Right. I think we are today already very diversified, so I think it makes much more sense, as Heimo just explained, to focus on different KPIs than only on this specific margin topic.
Priyesh from HSBC. Q1 2022 EBITDA contribution from growth of 60 million includes 40 million of self-help. So a 50 million contribution underlying increase. What about the synergy gains from 2021 acquisitions?
The synergy gains from the 2021 acquisitions you will not find in the block of where self-help is in it. We have a separate block, I think, in the bridge, which is called M&A contribution, and here you find basically the net contribution from the M&A targets.
And keep in mind that obviously the synergies don't come only in the first year.
Right.
We had really clearly the 3 years period.
You talk about an 85-90% capacity utilization at the group level. Can you give us a sense by division and region country? Thanks to Tobias from Stiefel.
Well, as I said, I mean, you can sort of take this. It is only important for, as I say, for the building solution side, or if I may say so, for the brick side and the roofing side. And this goes throughout the whole network. It's nothing where there's not much difference between Romania and the US these days.
Thank you. Amy Geller from Citi. You are already operating near your ROCE target of above 10%. Is this the normalized return that you expect from the business, or should we expect a higher ROCE midterm?
I think for that moment, we also discussed this intensively during the last weeks. And finally we decided to keep for that moment the ROCE target at above 10%. Midterm we can also see an increasing ROCE target, which we will communicate, I think, when it is time. But there is a potential. When we consequently implement our strategy, there is also the potential to come up with a ROCE target update.
Thank you. Do the 45 million and 50 million self-help contributions for 2022 and 2023 include the synergies for Meridian, Flowplast and Cork Plastics? I think we covered this one.
No, they don't. Are not included.
Yeah, good. Excellent. Can you update the outlook for growth and ESG capex in the coming years?
I think we have here given some guidance already in the past, at least for 22 and 23, and which is 60 and 80 million respectively, yeah, especially for the ESG. So this is in line with our expectations, and we will give you an update in February when we give you the sort of more accurate guidance for the year 2022. So there's nothing has changed from our perspective at this stage.
I think our targets for 2023 are out. You know them. We just have presented them, and the capex guidance on ESG is in line with that.
Amy from Citi. As we consider the recent acquisitions in the business and the higher maintenance capex, can you comment on the revised D&A for the business?
Well, first of all, I think I would strongly say one thing. It's not the higher maintenance capex, it's a maintenance capex which is adapted to the asset base. I mean, if you take over businesses in Europe, England, Ireland and in America in this size, you need some maintenance capex, and if I see the increase, it's very minor actually.
It is a very minor. Also, please keep in mind that we had this year, also in this field of maintenance capex, quite significant cost inflation when it's about steel and this kind of material. So we were already strict on maintenance capex, and that we have to increase. As Heimo just said, it is a minor increase with this 15 million. I think we are still strict when it's about capex management, maintenance capex management. I think on the depreciation, I think it is we have an average depreciation rate or a useful life of around about 12 years, and I think then you can also calculate what will be the impact on our depreciation out of these M&As.
Next one, page 72. What's the margin difference between the systems business compared to the rest of the business? Miro from JMS.
Well, that's why we are pursuing it, and I think you have seen it over the last couple of years that the margin of Wienerberger is moving up. Take pipes, take also building solutions or North America. And here you see that this is part of this move towards a more solution-based business. And this will be a moving target for us. It's significantly higher because otherwise we wouldn't move upwards in the margins, and we'll continue to do so. But it's again, it's not something that you can calculate every other minute, because this is a moving, and if you have a huge portfolio of products that moves this direction, you see it clearly in the upward trend. I remember discussing with you a margin that we had in piping around 6 or 7%, and now we are at 12.
11. We are this year will end above 11, and I think you only can look at it really on a very detailed level, but to scale it up on a group level is very difficult, because it simply, the range is too diversified to come really out with a sensible conclusion on that.
Adrian from Cape View. On pricing for environmentally better products, is it easier to price at a premium? On energy hedging, can you remind me where you are on your electricity rather than gas?
If I may start with the second one, I think we have presented, or in the presentation there is only gas in, right? For electricity we have round about the same volume fixed for the next years as we have presented in for the gas.
So when we come to the first question, it's about the better pricing for environmentally friendly products. I would say today, if I take all the markets combined from Wienerberger, it's still the aspect of more convenience and quality that makes the difference in pricing, and availability. The environmentally friendly one basically is not making a big difference when it comes to pricing right now, because the perception of our customers is that Wienerberger anyway provides an environmentally friendly product. So this is something where people sort of have the perception we are anyway the one that has the best product environmentally. But again, on convenience and quality and availability, we make the difference.
Thank you. In terms of M&A, what sort of size and product areas should we think of? Do you feel comfortable with your 2.5 maximum net debt EBITDA threshold? It seems high given your operational leverage.
Well, I think high or not so high, you've seen where we are today, how we work it, and how we manage it. You've seen the disciplined approach that Gerhard puts in place in the business. We obviously said to the 2.5, when we see opportunities out there and we see the right fit, we are ready to go this way, but then work ourselves the way down. I think Gerhard has made it very clear also, if there's the right opportunity and there's the right sort of fit, and not strategically, but also cost-wise and performance-wise, and you've seen our disciplined approach. I would say we've never asked the shareholders in the market for some equity to finance the whole growth of Wienerberger over the last decade. But if there's the right sort of deal out there, we certainly would not shy away from doing so, as Gerhard said. So because it's a clear thing, I think we have a track record behind us. We have shown what we are capable of doing with Wienerberger, and we want and we see this company to be a company to be moved forward.
You announced 2 cooperation agreements recently, solar and flat roof. Can you explain how this works? Do you distribute the products, and how do you get paid?
Well, I think the last part of the questions, Gerhard, if I may may answer it, we get paid when we sell the product.
Right.
And that's how it is.
This is important.
We don't get incentivized by the producer, because the producer, they are actually ensuring the manufacturing process. And we have agreements in place where we can buy this sort of them out, or if everything runs well, move into this business. For us, it's now a testing phase, and we want to use our commercial structure and organization in order to bring it to the market. Right. And here again, it's good margins, interesting business for us, and creates a bigger bundle of products where I said the solution is important again, where we can really gain experience. And this is how this cooperation works.
Seda, can you compare and contrast your view on infrastructure versus in-house piping solutions? Do you see one area as more appealing than the other?
Well, Seda, the appealing obviously when you talk about housing and the piping solutions when it comes to hot and cold water, electricity, data transfer, I think this is part of our ongoing business and will be developed further because we have a good knowledge when it comes to the wall construction, facade and roof. And here I think combining those elements will be a key one. We are working obviously when we talk about solar panels with the electricity component for the house. The whole pre-wired element plays in the prefabrication a very important aspect. The water, cold and hot water for heating, cooling, and also for the water in the house plays an important role. So again, yes, it's appealing. We want to create here more momentum and create a stronger business throughout our geographies, and you will see us moving there. On the other side, the infrastructure is, as you have seen in Northern Europe, appealing to us because we here have complete solutions. So it's certainly an area where we'll grow with the market and probably a little faster than the market. Outgrowing is to be expected also from the housing side or the applications when it comes to the housing.
Yasin from Onfield. Could the need to become carbon neutral lead family-owned clay company to sell their operations as they don't have the technology or cash to upgrade their plants?
Well, I think first of all, the generation shift and the succession planning is the most important driver for them to sell businesses. We are currently living through a phase again where energy prices are high. They have not been able to buy forward, for example. So there is a squeeze in margins, so they will think about running the business further. So I think we will have certain sort of waves of consolidation throughout Europe coming, and especially the over-regulation that we, by the way, suffer also from, coming from especially the EU and national authorities, is certainly something which demotivates certain entrepreneurs.
Family business, right?
Yeah.
And one more from Yasin. What is the strategy to keep clay products competitive when other building material producers are innovating very quickly to reduce their carbon footprint?
Well, I think I tried to be very outspoken today. I think we not only commit to a carbon neutral economy, we actually do it already, and we have products out there that are by far from a carbon footprint better than others. So they need to innovate indeed a lot to get to where we are today. And if we take this time and don't stand still and innovate further, we will have a certain competitive advantage.
Definitely.
You will see us much more active, by the way, in communication, in working with our distribution channels, with our decision makers in order to present this.
Is Wienerberger still collaborating with FBR to bring the Hadrian X robot to Europe? How is it progressing?
We are still cooperating with the folks from Australia. They have also difficulties in understanding our needs in Europe. That's why we have developed also other solutions that I have presented today. For example, the on-site solutions in the Czech Republic or the prefabricated solutions in Belgium. So we are not only putting our money on one aspect, or one solution, but a different one. So yes, we are still cooperating, but it's not the only one.
Miro from JMS. How big is the potential in the hydrogen pipes business? Can you give us a number for the midterm potential and how big this business is today?
Well, the business as such is a very small one because actually it's only limited to the Dutch market right now. And I think as far as I understand it, and please don't get me wrong, there's the only government in Europe that has a clear vision on hydrogen is the Dutch one, because actually they want to be from a perspective of usage of energy resources very much centered on hydrogen. So for the moment, there's a lot of talk everywhere, but the Dutch are the ones that drive it mostly, and they have the testing out there. So yes, I could say, excited as I may be as a startup business CEO, it's a huge potential. Billions are out there to be to be gotten from a market perspective, but from a day-to-day perspective, I think we need to be careful not to overreact. There is a good potential out there. We have the right pipe. By the way, the pipe is not only for hydrogen, it's also for other solutions in the oil and gas industry and other transportation. So I think we are fairly well positioned there.
Perfect. Conscious of time, we have 5 more questions left. Yasin from Onfield, could you give us more color on the carbon footprint per cubic meter of structural clay bricks versus concrete blocks and other competing products?
I've tried to give it. I will, Yasin will bear with me. I don't want to sort of overstretch this Q&A, but we will provide him with the detailed materials that are as a back here to this one. But we have this and we can provide it to him. Yeah.
Could you see yourself buying into a new product platform, facades, insulations, construction chemicals? Thanks, Tobias from Stiefel.
Well, I think we have been always open and we are cooperating with colleagues that are producing other materials. I just say insulation because obviously we use them in our block business, and on the construction side it is clearly linked to our business when you talk about wall and facade as an example. So here, yes, if the right opportunity comes and if we see it fit, then we certainly will consider it very, very thoroughly.
Said at Morgan Stanley, do you have in mind a target or 10 for M&A percentage contribution to sales each year, and would you be willing to communicate it?
At this stage, I think it's not something where Wienerberger will make a move on and say we must spend a certain amount. I think we are not. We don't want to put nor you nor us under pressure. I think clearly the approach is one that we have certain resources from a free cash flow perspective, from a some people call it firepower perspective, or from an additional perspective of raising funds. I think it's more an approach where we say, does it fit strategically? We have tried to lay the groundwork today where you can determine where Wienerberger wants to move in the next 3 to 5 years, I think, and give you here the indications. Yes, we are ready. We are ready on the human resource front, so we have the management capacity. We can integrate these businesses. We can run them, and I think most importantly, we can create value. And this is, I think, that's what we try to provide you with. And we don't want to put anybody under pressure that Wienerberger is now out there and running around and buying companies. No, we are just, when we look at something, we determine it's the right approach, then we do it, and then it creates obviously also value.
Could you please talk a little about the 2 roofing distribution agreements you did in the last few days? Will you rebrand and sell them, and what is the average distribution margin?
I think, listen, this is, I will more than gladly, Gerhard and myself will talk about this when it then materializes. Right. We are at the very beginning of this adventure, if I may say so, with those. We are excited about those 2 options because they are sustainable ones. Yeah?
They fit perfectly in our system solution approach, but I think it is simply too early now to go to that level of detail. Yeah?
Yeah. And please, I call them startup operations. Yeah, I mean, this is a unique opportunity for us to start from the beginning. The potential is huge. It's very important, right. And I think we can gain momentum there as we speak. And hopefully, for those who are sitting there in 10 years' time, we will see this is the right approach that we took today in creating a multi-million business.
Is there a risk of lower employee availability given new restrictions in Europe, US, especially on workers that are non-vaccinated? What level of wage inflation should we expect in Europe? So that's the last remaining question. Mm-hmm.
Well, the availability of labor, and I think the restrictions for immigration have certainly caused some issues when we talk about the value chain, right. The installers of and the installation of products. When I talk about the US, Mexican labor coming in or Central American labor coming in on construction site here, again, it's a critical aspect and we need to tackle it by solutions that we try to explain today. The same goes for Europe. You need to understand that Western Europe has been in a great situation because it attracted labor from Eastern Europe. But as Eastern Europe is getting better and wages are going up and the way of living there is improving, people move back and want to stay where they are. So we don't have this inflow of people anymore. So again, optimizing and our portfolio and making more convenient for our clients is key. And when you talk about wage inflation, it will be again a little bit different throughout Europe, but there's a couple of percentage points will be there out there. And some countries,
I think
mid-digit, single.
Right. I think what we have in mind is something where between the 3 to 5, and this is what we see. It's different, as Heimo said, between the countries, but this is what we understand, where also at the moment negotiation with work councils are going on, and it will be in this range, we assume. Yeah.
I can confirm that there are no further questions at the moment. Please also keep in mind that if you have follow-up questions, you can always send an email at investor@wienerberger.com. I would like to take this opportunity to say goodbye and thank you once again for your participation. We will see you no later than February 23rd with the publication of our full year results. Mr. Scheuch, Mr. Hanke, any closing comments from your side?
No, thank you for the questions. Thank you for this engagement. I do regret that we can't meet personally, because I think it's important. I'm a little sad not to have you here in Vienna or at some other locations. We both really look forward to have then a Capital Markets Day soon where we get together. We wish you, the ones that listened from the US, a happy Thanksgiving and enjoy the time with your family. For those of you then that we don't meet on roadshows, virtual roadshows and digital roadshows, and where you can ask much more questions and we are eager to answer them, wish you a happy end of the year and a joyful season, end of the year season, and see you all back healthy and cheerful next year. Thank you.
Thank you.